All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin. Now, this update is going to be a little bit different from my normal daily updates. I will still make another video later today doing my normal daily updates, but in this video, we're going to talk more about Wyckoff distribution patterns and if we are in the process of seeing a possible distribution pattern in the making here. So first off, I want to talk about this weekly cycle channel that I've been watching on my charts since early November, actually before November, but really it started coming into prominence in early November when we started getting up towards the top of the channel here. Now, this weekly cycle channel was pulled from the last two cycle highs, the bull market cycle highs of 65K, 69K, and then we bring it down to the bear market lows here. And you can see how absolutely well this trend has been respected. Even though the pivots, some of the pivots were chosen after the respect of the trend, we know that trading is based off of sentiment and psychology. So a trending market you do see price action respected in the past, but also the more respected it is in the past, the more likely it is to be respected in the future. So we can see how well this trend in this channel has been respected through the entire 5 years since 2020 here. Really after the COVID lows here, you can see even reject from here, get back into the channel. Now, here we are in this channel, and in a bull market, you usually see, now we're talking in terms of Elliott waves here. You usually start a bull market with a 5-wave impulse, and you have your 5 waves to the upside. And then after the 5 waves are completed to the upside, you see a 3-wave correction to the downside, or a series of multiple 3-wave corrections to the downside. And so here we see a pretty clear 5-wave structure to the upside. Now, the question is this structure done with? Are we about to see a bigger dump down to the 70K area or even 49K? I know that sounds crazy right now, but we're just going to analyze the charts and see if this is a possibility. So we have our 5-wave structure here. We know that we're in the 5th wave. We're towards the end of the structure. If the 5th wave is in or not, we're not 100% sure yet, but this week is really telling us a lot, giving us a big hint here. And depending on how this week's close, this is a very important weekly close. Let's just say that. All right, now, so we have our 5-wave structure here. And what we're going to do is we're going to go ahead and dive in. We're going to go on to the 12-hour time frame, and we're just going to look at this upper price action here in this area. And we're going to look at, first of all, 3 different scenarios that can happen. I'm going to cover both the bullish scenario and the bearish scenarios. We're going to map out each scenario, go into detail on each scenario, and find out which is most probable. Now, I'm going to let you guys make that decision for yourself. I might give my opinions towards the end of the video here, but we're just going to go ahead and go into detail here, see if we can map out a proper distribution over this price action here since November 11th, over this range here since we've been in since November 11th, and see if a distribution is in the process of playing out or not. So first off, we want to go to our Model 1 distribution here, and I'm going to go ahead and turn this on. All right, and in a Model 1 distribution, let me pull this up here. What a distribution is, first of all, you have big players that trade in the markets, and these big players are trading with billions and billions of dollars. And so they are building their positions through an entire bear market, an entire bear market. They're building their positions up when people aren't interested in trading because it's at the lows, or people aren't interested in buying because there's fear in the market. And when retail is gone, they are buying and building up their positions. So for instance, with Bitcoin under 30K, they were buying their positions under 30K, specifically under 25K, building their positions. And as the market cycle continues and matures, and it's looking towards the end of the bull cycle, or the end of a big impulse of a bull cycle, you start to see them offload their profits. Now, because they have such big positions, they can't offload it all at once. It would cause, they wouldn't be able to have the liquidity for that. So what they do is when this range starts forming, they offload it. And this is also when retail tends to get in towards the top of a market. Retail is not paying attention when it's at its lows. And then once the price starts pumping like crazy, retail starts getting interested. They see that Bitcoin's made a new all-time high. You hear on the news, Bitcoin's going to 500K, Bitcoin's going to $1 million per coin, and they still think they're early, and they start buying when Bitcoin is near the highs of after major pumps, after months or years of pumping. They'll get interested at the exact wrong time. So what happens is you have that pump up here, and then you start to form a range, and they're offloading their positions in this range here, and while retail is the one buying. So retail always is the victim of this for the most part. There are some people who buy no matter what price, like we just saw Michael Saylor buy $2 billion worth, near the highs, which I won't go into that. All right, so let's go ahead and look at this Model 1 schematic. So first of all, in a Model 1 schematic, you have 3 highs, and you have your first high here, which is called the buying climax, the BC, the buying climax. Then you have a second high. Now your second high is always higher than your first high. That is an absolute hard rule for Wyckoff. The second high always has to be higher than the first high. And then in a Model 1 distribution pattern, you have a third high that's even higher than your second high. So let's go ahead and look at our chart here and see if we can't map out these levels here, this here, to see if we can correctly determine if this is a distribution pattern. And as you can see also in this distribution pattern, there's certain phases of the distribution, and each thing has to happen in a certain phase. So we're going to cover this in depth. I pulled up the website. We're going to cover this in depth and see if our chart is aligning up with a possible distribution pattern. All right. First off, let's go here to the Wyckoff distribution pattern. You can see this is our Model 1. So the first thing you see is your preliminary supply here, where large interests begin to unload shares in quantity after a pronounced move up. Volume expands and price spread widens, signaling a changing trend may be approaching. And what they mean by a changing trend is like a range here, or small drops to the downside, but the big impulse, the big explosive impulse is starting to die out. So let's go to Bitcoin here, and let's look at this crazy big impulse here, and we see our PSY, our preliminary supply, in this area. Now, is volume expanding during this PSY? Yeah, you can see how big the volume is here. Volume expansion, we have that big push up, and we're starting to see a little bit of weakness come in this general area here. So we have determined we have a preliminary supply here. All right, next up, you get your buying climax. You have one more push up to make that high, and you see a buying climax. And the buying climax, it's during which there are often marked increases in volume and price spread. The force of buying reaches a climax with heavy or urgent buying by the public, by retail, being filled by professional interests at prices near the top. A buying climax often coincides with a great earnings report or other good news. So, we did know Trump just won the election, first pro-crypto president. There was a lot of bullish sentiment on Trump becoming the first Bitcoin-friendly, crypto-friendly president. So we've had our first big buying climax. You can see this really aggressive push up here in those days, and volume is increasing since this kind of chop here. We saw the biggest increase on the preliminary supply, and then we saw a little bit of chop in volume here, and then we see our buying climax with increased volume from that area. So we do have our first high, our buying climax, right in this area here. Now, after your buying climax, you want to see an automatic reaction here. And what that is, it's a drop. You see a drop in the price, and you have what's called an AR level. So with intense buying substantially diminished after the buying climax, a heavy supply continuing in AR takes place. The lows of this sell-off helps determine the lower boundary of the range. Okay, so the lows. Now remember that the lows of the sell-off often determine the lower boundaries of the range here. All right, so you can see that we have this sell-off here, and it's a pretty quick flash crash here, and we start to get into the lows here. Now, I didn't put it to the wick down there because of the way this reacted here, but it's generally near the bottom, and you can see how well this AR defines the bottom of the range. It definitely defines the bottom of our range that we're in. So we have our automatic reaction level here. Now, this is all part of phase A of the distribution. This is the beginning part of the distribution. And then what happens next after that is you have a secondary test. All right, so let's go here. Secondary test in which the price revisits the area of the buying climax to test the demand supply at these levels. For a top to be confirmed, the supply must outweigh demand. Volume and spread should thus decrease as price approaches the resistance of the area of the buying climax. An ST may take the form of an upthrust in which price moves above. Now, price moves above the resistance represented by the buying climax, and possibly other STs before quickly reversing below. Okay, so let's go back to our chart here. Now you can see this high is higher than the buying climax, but our volume overall is decreasing. You see that one big red spike, but that's on the sell-off right afterwards. That's really our sign of weakness, the SOW. And you can see our volume here is generally lower than our buying climax here. And it did go higher than the buying climax, and there was decreased volume in between there. So we have our secondary test up here. It went higher than our buying climax, but it can still be classified as a secondary test. Now, this is the end of phase A here, the end of phase A. And then after the end of phase A, you get what's called a sign of weakness, an observable draw as observable as a down move to or slightly past, so to or slightly past the lower boundary of the TR, usually occurring on increased spread and volume. The AR and the initial SOWs indicate a change of character in the price action of the stock supply. Supply is now dominant. Okay, so let's go into our chart here. The AR is set here, but we could put it here at the lows, and it's about the same level as our sign of weakness. Now, I like it where it's at there, where it crosses over it a little bit. Also, the bottom of our range aligns a little bit better there. So, but we do have that markdown here. We have the sell-off, the markdown in price. You can see we had that big dump right afterwards. So we have our first sign of weakness here. All right. After your sign of weakness, let's go back to the Wyckoff thing. You have what's called an upthrust after distribution. And the UTOD is a distributional counterpart to the spring and the terminal shakeout in the accumulation range. It occurs in the latter stages of the TR and provides a definitive test of new demand after a breakout above the TR resistance. Analogous to springs and shakeouts, a UTAD is not required in a structural element. The TR, okay, so pretty much saying it's a distribution schematic 1 contains a UTOD. That's the third high. So some of them, Model 2 doesn't have that. All right, so we can see our initial upthrust here. That was our second high. We have our first high, our second high here. We see some weakness here, some less demand here. We could even say this was a LPSY here, just a last point of supply, a little test of a last point of supply. It's a feeble rally on narrow spread, shows the market is having considerable difficulty advancing. This inability to rally may be due to weak demand, substantial supply, or both. All right, it represents exhaustion of demand in the last waves of large operators distribution before a markdown begins in earnest. So we do have that secondary test here, or LPSY here, and I didn't mark it out because just generally this is kind of like a range where we're seeing diminished wanting, what's the word for it? Just diminished looking, diminished interest here. And so, and then we get that low below our sign of weakness here. We get another kind of low here around the lows of the range. And then we get that upthrust after a distribution. So this could kind of be considered a distribution or even a small accumulation within the bigger distribution. And we get that last upthrust. Now the UTOD only happens in a Model 1. And the Model 1 has the third high that's higher than the second high. And so we have our Model 1 where you can see it is higher. It's not much higher, but we did grab the liquidity of these highs. And then we start to see this kind of chop and shake out here where we're starting to see weakness. That is our phase C. By the way, this part here where we get the upthrust is in our phase B. and we had our phase B with our sign of weakness in phase B. And then after you get your up thrust after distribution, your UTOD, you start to sell off a little bit. That UTOD is in the latter stages of the trend range and provides a definitive test of new demand after breakout. All right, so we got our UTOD here. That is our phase C. Phase C is usually pretty quick here. And you can see even on this chart, your phase C is a smaller phase here with just that UTOD test. And usually it's breaking the highs of your up thrust. And it's also chopping around the range of your first buying climax. So you can see here, it is chopping around the range of our first buying climax. If we put a horizontal line on our buying climax, you can see the bottom of that buying climax was acting as support in here. And the top of the UT, the up thrust, is acting as a resistance, and we were just chopping in between these two. So this is a valid up thrust after distribution in a phase C. All right. Now, next comes your LPSY, and that is your last point of supply. After testing support on a sign of weakness, okay, we saw a sign of weakness here. We came down to the bottom of the range again to our automatic reaction level, really the kind of the bottom of the range. We saw the sign of weakness, took the liquidity down here. Another just dumped down here. We didn't take this liquidity, obviously, and then after that, on the last, it's a feeble rally on narrow spread, shows the market is having considerable difficulty advancing. All right, and this is where I want to bring in the Fibonacci's. So let's go ahead and turn these Fibonacci's on here. And you can see from our UTOD high down to our first low, we came up and we rejected from the golden pocket. First sign of weakness there. Lower high coming in, rejecting from our golden pocket. All right. Now, next time from that high to our new low where we had where our sign of weakness was, come up, reject from the golden pocket, having trouble and difficulty advancing. Then from this high here down to our new low down here, we have a third rejection from our golden pocket. Another sign of the market having difficulty advancing. So 3 times rejecting from the golden pocket, 3 times having trouble advancing in the latter stages. This is your phase D of the Wyckoff. You're seeing that trouble come into the market. You're seeing low last point of supplies being hit, starting a lower time frame downtrend in here, starting to push downwards. And then after that, you have your phase E dumpage distribution. Well, look at this, guys. Phase E, we had our last point of supply here. Boom, we're dumping. So to me, this absolutely could map out as a valid Model 1 distribution pattern up here that we have been seeing since November. It is the right place for it to occur. If we zoom out and we look at the Elliott wave structure, we are in the top of a possible wave 5 structure on a 5-wave impulse on the weekly time frame. So are we seeing distribution playing out now? All right, that is our Model 1 distribution pattern. And if this really starts to distribute, 70K is absolutely in the cards, if not lower. So let's go ahead and turn off our Model 1. And let me go ahead and get rid of that. And let's go ahead now and look at the next type of distribution pattern, which is a Model 2 distribution pattern. Now, a Model 2 distribution pattern is a bit different, but same kind of concept. You had the big whales, the big institutions buying throughout the bear market, building their positions. And then when you get towards the top of a cycle, they need to offload those positions and they need liquidity to do it. So who do they use as liquidity? Retail traders that are just getting into the market now because they see it on the news. They're getting excited. They think Bitcoin's going to $1 million per coin. And you start to see the distribution pattern in play. So a Model 1 is a little bit different, or a Model 2 is a little bit different than a Model 1. You can see in our Model 2 here, let's turn this all the way up. All right, we still have our preliminary supply point, and then we still have a buying climax and an automatic reaction. So on this one here, actually, let's do this. We see, and I marked the preliminary supply as this first high here. We have that preliminary supply, and then right afterwards, we have our automatic reaction here. Then we have our buying climax up here, buying climax. Okay. And then we start to see that chop in the market. Let's go ahead and look at this. You see that. And all right, secondary test. So you see that buying climax here, little bit of a drop, and then you see a secondary test. Well, where's our secondary test? Right here. You can see we came up, we made a lower high, secondary test. Also, if we look at our golden pocket here from highs to lows, where did we reject? Golden pocket. So golden pockets in this entire range have been golden. That hence the term golden pocket. I mean, they've been great. So there you go. And that's your phase A. So far in a Model 2 distribution, we are also seeing it play out accordingly. This could be a Model 2 distribution. As far as larger time frames, it only looks like there's 2 highs. But we do have to take into account these first highs here. All right. Now, after your secondary test, you get your sign of weakness, your first drop below the AR, and the AR determines the bottom of the range. We'll look at this AR, determines the bottom of this range really well. Lows, lows, lows. Saw the wick past it to grab the liquidity. Lows here. So we have our sign of weakness. This is the start of phase B after the secondary test. Then on a Model 1, you get your up thrust, and this is the second high of the range, and you have that really climax, that all-time high that's created, or the high of the cycle. So our up thrust is in phase B. We see that here. Then you kind of chop for a bit. You go into phase C where you see a last point of supply. All right, we have that up thrust in here. And once again, the up thrust is in that little range that I showed you on the last one, right in here. And then you see a drop, a little bit of a drop, and then your last point of supply hit here. Once again, I showed you guys that was already the golden pocket from the up thrust to these lows here, golden pocket. Having trouble advancing in the markets, showing some weakness and diminishing buying, diminishing interest in buying. Last point of supply, phase C. Then you go into phase D. You see another sign of weakness here. Sign of weakness is to come down to the bottom, near the bottom of the range or past the bottom of the range here. Well, that checks out. We had another last point of supply. Once again, another golden pocket rejection. You're chopping for a bit here. This is phase D. And then in phase E, you see the distribution start to play out. Increased volume on the distribution playing out. Some of the highest volume we've seen since the beginning of the distribution. So, and this is, remember, this volume in here is where they're really starting to offload their positions to retail. So we also see that a Model 1 distribution pattern would work as well. All right, so which one is it? Is it a Model 1 or a Model 2? Well, does it matter if it's a distribution, it's going down, you know? So it doesn't really matter which one it is, but we can see that both patterns could work out as far as the technicals go. Both patterns could work out. All right, now, third off, there is one more type of pattern that we can look at. And I'm going to go ahead and come up here real quick, and we're going to go grab our pin here. So say you're in an uptrend, higher highs, higher lows, higher highs, and then you start to kind of chop and form a range here. You can form a really long range here. Oftentimes it can be a bit of an ascending channel or a bit of a descending channel where you chop kind of down a little bit in a descending channel. And then in what's this, it could either be a distribution or it could be what's called reaccumulation. So let's go ahead and look at the chart here. Let me turn off the Model 2 for a second. Let me turn off the volume for a second. And let's go ahead. Let's go on to the daily time frame and let's look at our last range that we had. You can see it was kind of this descending channel that we were in. We were forming this descending channel here. And we had a sort of, it could have been a distribution or it could have been a reaccumulation. Now this high, the 74K high, was right after the spot ETFs got approved. We were really seeing a lot of inflows into the spot ETFs through this entire range here. So that could have given us a hint that, hey, this is not going to be a distribution pattern. This is going to be probably a reaccumulation pattern where you bust to the upside. Also, we know we could have got that hint because it was not the completion of our 5-wave Elliott impulse. Here's another sort of distribution type pattern, reaccumulation type pattern here. But the ultimate accumulation was down in this area here. You can see the bear market lows. A lot of smart money was accumulating Bitcoin in this area for the bull cycle to happen. So there's accumulation, reaccumulation, reaccumulation. Is this a third reaccumulation in a row? I mean, it could be, but as far as Elliott waves go, we have our 5-wave impulse to the upside, and we know that it ends in a 5-wave impulse. So maybe this time, is it distribution? Well, let's kind of wait and see. You know, this weekly candle close is really going to give us a hint on that. But what we're going to go now back into that 12-hour chart, and let's go ahead and look at our last pattern, which is reaccumulation. Now, reaccumulation is bullish. So if Bitcoin wants to remain bullish, there's a few things that we can look at here. Let's turn on our reaccumulation. All right. Now, very, very similar. Reaccumulation often occurs during a long-term uptrend. Are we in a long-term uptrend? Yes, we have been, which will continue in the future. The main street is finally on the right side as well. So Main Street, you know, mainstream's finally seeing the adoption of Bitcoin. We see the spot ETFs finally getting approved. Inside a Wyckoff reaccumulation schematic, buyers are closing parts of their long positions and sellers are joining the market. With the incoming selling positions, the market makers can fill new long positions. Okay, that's going to be important. So because we are seeing some market makers fill new long positions, e.g. Michael Saylor right now buying at the top, which, yeah, okay. And so let's look at this as a possible reaccumulation. If you think Bitcoin is not done, if Bitcoin is going to go into a bigger super cycle, could this be a reaccumulation? Let me make this pink. All right. So how does a reaccumulation work? It's very similar. You have this range that often happens for months at a time. And in the range, you see your preliminary supply, which we do have our preliminary supply here. Then you get that buying climax. So we have our preliminary supply here. We have our buying climax, our first major high up here. All right. And then you can see your automatic reaction. Now, we could put the automatic reaction down here, where you can see it's also the lows of the range, or you could even put it right here. Automatic reaction determines kind of the lows of the range. And look at that's right at our value area low around 92.2, 93K. So we have our automatic reaction here. Start to chop for a little bit, just like you normally do after an automatic reaction. Grab the liquidity there. Then you make your secondary test. Now, this is the end of phase A. We saw our secondary test. Once again, I showed you guys that was a rejection from a golden pocket. From these highs to this low here, rejection from a golden pocket. Then you drop down, you see a sell-off here where you get your first sign of weakness. You take the liquidity of the lows of the range. We did that. Here we go. Sign of weakness right here. Now, after your sign of weakness, you get that up thrust. This is in phase B. You get your up thrust, which is your second high, your bigger high up here. All right. Up thrust. We have it. Up thrust here, phase B. Got that high, new high, higher than the buying climax. Okay. Then you see this almost descending channel type of grind to the downside in what they call the creek. This is just a little bit of exhaustion in the market. Some people are selling while others are buying in this area. All right. Do we see that? Let's go ahead and look here. Well, this is a pretty clear descending channel type wedge structure here to the downside, where you can see volume was decreasing quite a bit here. And we were seeing some buyers step in and some sellers sell off. Okay, that's your phase B. Your phase B, you're still in the creek here. And I don't know why this should be labeled. Creek, okay, top, middle. You have your creek here. Okay, that's in phase B. Then you move on to phase C. In phase C, you can see a couple of things. You see either a lower low where you take all the liquidity of the entire range, and this is called your spring. It's one last liquidity grab of the bottom of the range, and then you can shoot to the upside. You see after the spring, you kind of reclaim the value area low, back test the value area low, and continue higher. Okay, so if this is phase C and this is our spring, I know some great traders out there, Andy Bitcoin Consensus, shout out to Legends. He's looking at this as a possible spring. And so is this a spring here where we're seeing that one last drop to the downside to take the liquidity of the entire range here, to have that one last scoop up of money to get everyone fearful and selling, and then we see that big push up. Okay, if this is the spring, it's got to start soon. If this is a spring and this is a reaccumulation, we can't hang out down here. Usually the spring is a pretty quick grab and then push up. So what we want to see here, if this is reaccumulation, we want to see a push up, preferably before the weekend, before Sunday close, before the weekly close, push up maybe to the midline of the creek, back test your lows here, your automatic retest area, maybe push up to the top of the channel actually, and then back test the midline of the channel, which would also be your back test here, kind of get back in here. And then you see that big jump across the creek. So you can see the creek is from all the way up here to all the way down here. You want to have that big push up, and they call that the jump across the creek. You have that big push up where you're just taking all the liquidity of this channel. And oftentimes I talk about this with you guys. When you break a channel, either to the upside or the downside, you'll often sweep the liquidity of the entire channel. So we can see that. Are we sweeping the liquidity of that channel? What we would want to see is we would want to see that. Of course, it's not happening yet. So you'd want to see that big liquidity sweep come to the top of the channel area, sweep the liquidity. Then you want to see what's called the sign of strength, the SOS. Now your SOS is you're finally getting above your prior up thrust. You're breaking market structure bullishly by getting above that up thrust high. You often come back test that high as the last point of supply, and then you continue higher on your area. You know, something like we had all of this here. We had our spring here, came up quick, our back test, explosion to the upside. Okay, so reaccumulation here in our wave 4. The only reason why this could not be reaccumulation this time is because we are in our 5th wave of a Elliott wave structure. So you guys decide which one it is for yourself. Personally, I am leaning towards this might be distribution. And why am I leaning this way? Because we are at the 5th wave. We're on the 5th wave of our clear 5-wave weekly impulse to the upside on Bitcoin. Also, let me turn this off now. We are in our 5th wave. If we go onto our weekly chart and we turn on our Elliott waves here, you can see clearly we have 5 clear waves to the upside. Yes, in wave 3, you expect reaccumulation. At the end of wave 3, that's what wave 4 is. It's almost a reaccumulation. And then you have your wave 5 where you top out, and then you see your bigger ABC correction after that. After wave 5, you generally see a bigger ABC correction. So why do I think this could be the top of our wave 5 and this could be distribution? Well, let's look on the charts here. All right, let's go to our oscillator here. Market cipher, weekly time frame, bearish divs, money flow coming out aggressively now. Between our 74K highs and our new all-time high, we have weekly bear divs confirmed and already starting to play out. Money flow topped out around our highs. Look at also, when you look at a buying climax, the money tops out here. You can see if I put a vertical line here, let's put a vertical line kind of where money flow tops out. So I would say like right in this area here. Look at that. That's right where our PSY would be, right towards the beginning of the range. PSY, buying climax, money at the peak. Okay. Now we have that range for a while, that distribution range for a while. Look on the monthly time frame. By the way, our month closes in a day and a half. Let's go on to our monthly chart. Monthly chart here. Let's delete this. Let's go ahead and hide this. Between our highs, 74K high, 100K high. Bear divs on the monthly time frame, about to confirm and really confirm with this candle here in a day and a half. Money flow topped out, starting to curve to the downside. Is this more probable to be a distribution or a reaccumulation? To me, with our high time frame bearish signals that we are seeing on the chart, also with our not only our high time frame bearish signals we're seeing on the chart, but also being at the top of our cycle channel, it is more probable in my mind that this is a distribution in the making. And we are starting to see that distribution play out. Now, could I be wrong? Absolutely. Do I know for sure? No, I don't. You guys, I don't know. But I'm looking at probabilities here. We have had the high time frame warning signals flashing to us during this entire range. Also, if we go on the daily chart, I know I've talked about this in many, many different videos. Let's go on the daily chart here. In this range, in this upper range, in this possible distribution pattern that we're seeing, money flow topped out right around your PSY here, your preliminary supply. Ever since then, money flow's been draining this entire way. What does that give us a hint of? The big money's offloading. They're distributing. Retail's buying up here. Michael Saylor's buying up here. Smart money is offloading their bags. Money flow's coming out. This is telling me this could be distribution. I'm leaning towards distribution. Now, even if it's distribution, you do expect to see small bounces on the way back up. So I do think 93K, we could bottom out here where our anchored VWAP is, maybe go all the way back up to like 92, 93K, back test that, and then keep coming down. You start, you're not going to go straight down. You're going to you're going to have bounces along the way at major support levels. And where do we find support? Well, we found support at our major anchored VWAP from the wave 4 lows. Anchored VWAP here. You can see that's a very big support level. So yes, absolutely. And also, it's the golden pocket of our last real big push up, our last big impulse in here. If we pull our golden pocket, I've showed this in the last 2 videos, so this shouldn't be a surprise to you guys. Golden pocket in confluence with an anchored VWAP, yeah, that's strong support. So yes, we could expect maybe a small bounce, but is that bounce just going to be a lower high bounce to back test these lows? Prior lows now flip to resistance and then dump? If we do our range here and we pull our range here, are we just going to come do something like this? Come up here, back test the value area low, and then make new lows. That is the question. To me, distribution looks more probable. You guys decide for yourself. The money flow gives us a hint that the money was offloading this entire range. The Elliott waves give us a hint. It was our wave 5 of a weekly impulse. The weekly cycle channel gives us a hint. Hey, we're at the top of a major cycle that has been respected, highly, highly respected in the past. And also, just the way, the way that the world is running right now. Trade wars, oftentimes these things don't happen because of fundamental news, but fundamental news can be a catalyst to push it down. Trade wars starting right now with Europe, China, Canada, Mexico. Yeah, it's possible. It's probable. More probable in my mind. Now, if you think I'm wrong, that's great. But I just wanted to show you guys the TA. I just wanted to show you, go in depth on the Wyckoff here, really map it out for you and show you all the possibilities. That's why I showed you all 3 as well, because I don't know which one it is, but I can make an educated guess based off of technical analysis, based off of our indicators, what our indicators are showing us, and based off just what we're seeing in the world around us. So that's it for this video, guys. I hope this video was helpful. If this video was helpful to you, please like the video and subscribe if you got anything out of this. Also, link in the description. I am partnered with MEXC, and they are running that campaign till March 7th, so you still have time to register and get the free bonuses. You'll get $10 free bonus if you sign up and deposit anywhere under $500. And then if you, depending on how much you trade, you can get up to $20,000 in future bonuses. That is on MEXC. Link is in the description. Thank you guys for all your support. Thank you guys for watching. Hope this video helps you in some way, and have a good day.